I'm a senior in finance.
My name is Gus Mayhew. I'm a senior in finance as well.
And my name is Nicholas Walton, also a senior in finance.
For the company we brought you today, we brought you Costco with a target price of $840, a potential upside of 16.28% as a buy. And as you'll see in a minute or two, our presentation is really, really interesting in the color selection because we bleed red and blue. Now getting into the business description.
Thank you, Gus. So Costco Wholesale Corporation is a membership warehouse retailer that offers a variety of services. Taking a look at the revenue segments, you can see they're broken down into two revenue segments of warehouse and membership fees. Under warehouse, they're broken down to 5 separate product categories of foods and sundries, non-foods, warehouse ancillary and other businesses, and fresh foods. What's important to note is that warehouse ancillary and other businesses are 2 separate product categories but listed together in their financials. Part of Costco's strategic vision is their membership model. They have 130 million cardholders in 79 million households. By having a membership model, they're able to generate customer loyalty while inducing stickiness to the business. Their membership model also creates exclusivity and word of mouth for the business. Furthermore, taking a look at their active SKUs, you can see that their storekeeping units are 4,000 per warehouse, compared to that of Walmart at 120,000. By keeping their active SKUs low, they're able to drive down their operating expenses while driving up their operating income. Where does Costco operate? Costco operates mainly in the US with 604 stores accounting for 72.9% of revenues. Their largest international market is in Canada at 108 stores accounting for 13.6% of revenues. Aside from the Canadian market, they're in 12 separate countries with 164 stores accounting for 13.5% of revenues. Now taking a look at their mergers and acquisitions, you can see that their most recent acquisition was of Costco Taiwan, where they bought out their joint venture's 45% minority interest for $1 billion. And in 2020, they also bought out Innovel, where they supported them with logistics and transportation, and they also bought them out for $1 billion as well. And if we take a look even further back, you can see they also acquired Costco Mexico, where they bought out their joint venture's 50% stake, making Costco Wholesale Corporation the full owner of Costco Mexico. To date, the Mexican unit has been doing very well, opening a new store almost every single year. So now on to industry and market, I'm going to pass it off to Gus.
All right, so now within the industry and market as a whole, I'm just going to give you a brief overview of the whole market and then just tie that directly into Costco. First, we're just going to take a glimpse at warehouse and superstores consumers in general, in which consists of businesses, families, and then financially minded individuals looking to buy in bulk while saving money. This can be seen in the market segmentation breakdown, which within a majority of the consumers consist of businesses and then households with over $50,000 in income. An interesting note of this is that between Costco and Sam's Club, Costco on average brings in a higher household income of roughly $120,000, while Sam's Club only brings in around $80,000 in household income, meaning that Costco brings in a more affluent community able to drive up more sales and more members. Next, we're just going to look at the US industry performance, in which we're just going to see that over the past 13 years, the compound annual growth rate for the US warehouse and superstore industry has grown at roughly 2%, while Costco has grown at compound annual growth rate of roughly 9%. And we project that into the future according to analyst estimates, they estimated the industry to continue growing at roughly 1% with a continued growth within Costco of roughly 7%. Now I'm just going to break down the specific revenue share within the warehouse and superstore industry as a whole, of which the total North American revenue share consists mainly of Walmart. However, within the specific warehouse industry, we can see that flips, in which Costco, being a warehouse industry, has a majority of the market, beating out Walmart or Sam's Club by a large margin. All right, lastly, within the industry, we're just going to give a brief macroeconomic possibilities, of which we have 3 predicted. First being a soft landing, in which Costco's revenue strengthens from increases in consumer spending, just growing them overall as a company. Next, we have a mild economic downturn, in which everybody in the industry loses some consumer spending. However, we believe that Costco will have an increase in market share as more people are looking to buy in bulk and save money. And then lastly, we have a severe recession, in which everywhere is going to lose consumer spending as a whole. However, we believe Costco specifically will have it dampened a bit due to the increase in market share. Now, this can be seen with their stock price in the past 4 recessionary periods, of which Costco has actually grown in 3 of those, only falling during a 2008 financial crisis. And this is compared to the S&P 500. Now moving to investment risks with Tim.
Thanks, Gus. For investment risk for Costco, one thing to mention is that these are also opportunities of growth for Costco. I also want to get into the latest news from the quarter, Q2. The old CFO announced that he's retiring. This is behind the latest stock price drop that Costco had. He's going to be retiring in January 2025. He'll also be staying with Costco until then, helping transition the new CFO, Gary Millerchip. With Gary Millerchip, as you can see, we have a young tenure, short tenure, as the old executive team is being, they're retiring. And so we have a young tenure coming in. And then this will also be mitigated by the experienced board of directors that are on Costco. Next up that I want to get into is whether Costco translates internationally. This is especially important because their competitors, such as Walmart and Target, have a hard time getting and staying into international markets. I'm going to get into the next slide, as you can see here. These are Walmart locations internationally. Every dash represents a former market that Walmart has once been operating in. Compared to, as you see on the next slide, Costco. Once Costco has entered a market, they have not left that market. In fact, they usually grow once they're in. And I want to provide their strategy behind this with the Denver Metro locations. Every dot you see on the screen is a Costco location within the Denver Metro. And the main point on this is that they are major thoroughfares. We want a lot of cars to be going through Costco. This is also to be seen in mainland Asia with China and Korea. It's hard to see right now, but I'm going to zoom it in for you. The strategy is still present. Every Costco location, the blue dots, are on major thoroughfares. This is to get more cars in with bigger tickets. Next, on to Timothy.
Thank you, Tim. So taking a look at their capital structure, you can see that their cash and equivalents is much higher than their total debt, meaning that Costco can pay off their total debt today if they wanted to, with excess to spare. Well, what's important to note is that debt for Costco is not a worry. So some of our key points from our financial analysis is that looking at this graph, Costco's SG&A as a percentage of revenue is much lower than that of Walmart and BJ's Wholesale, and this could be reflected through their managerial discipline and efficiency. So taking a look at their turnovers, you can see that Costco turns over their inventory 12 times a year, 4 times higher than Walmart. And if you look at their return on invested capital, you can see that every dollar invested into Costco generates more profits and more returns for the shareholders. Costco has 1,000 basis points more on return on invested capital than Walmart does. And if you take a look at these two sides, you can see that Costco has doubled that of Sam's Club in domestic operating profit per square foot and sales per square foot, indicating their dominance in operating performance. So on to valuation with Nick.
Thanks, Timothy. All right, what am I gonna do for you? Here's what I'm gonna do for you. I'm gonna give you a broad overview of how we got at our $840 price target for Costco. Then I'm gonna give you a more in-depth look into our bull analysis into Costco, the analysis in which we put the majority of our faith. So how do we arrive at our valuations? We've used fundamental discounted cash flow methodology in which we projected out 10 years worth of pro forma income statements, balance sheets, and cash flow statements for each of our 3 bull, base, and bear case analyses. Then we got a terminal growth rate and we discounted all future cash flows back to present day using a weighted average cost of capital you see here. How do we arrive at our weighted average cost of capital of 9.6%? We arrived at our weighted average cost of capital of 9.6% by multiplying Costco's 5-year beta times Bloomberg's recommended equity risk premium. We then added to that the current risk-free rate, the 10-year treasury, to get our cost of equity, which we added on to the Costco's weighted average cost of debt to arrive at our discount rate of 9.6%. Now, looking at our top line revenue over the next 10 years, an important note, over the last 10 years, Costco's top line revenue has grown at an 8.6% compound annual growth rate. And our base case assumes that the last 10 years look a lot like the next 10 years. So our base case in which we rated, Costco has grown at an 8.6% compound annual growth rate over the last 10 years, and our base case assumes 8.6% growth into the future, in which we weighted that one 30%. Moving on into our bear case, in which we weighted 20%, this assumes a meaningful 100 basis points of contraction in top-line revenue growth, seeing next 10 years top-line revenue growth growing at 7.6% compound annual growth rate. And finally, into our bull case, the most important case, we have 200 basis points of expansion in top-line revenue growth, resulting in next 10 years top-line revenue growth growing at 10.6% compound annual growth rate. Now, looking at those drivers of that top line revenue, we've got Costco's same-store sales, membership revenue, and store count growth. Now, over the last 10 years, same-store sales have grown at a compound annual growth rate of 5.5%. Membership revenue has grown at a 7.2% compound annual growth rate, and store count has grown at a steady 3.1% compound annual growth rate. And again, our base case assumes last 10 years, same as next 10 years. In our bear case, we see a significant contraction in both same-store sales and store count of 50 basis points. This is a situation to assume a significant decrease in consumer spending and a decrease in international growth opportunities. Now, as we look into our bull case, again, the most important case, we see same-store sales growing by 100 basis points of expansion. This is due to Costco's current growing members per store, their elevated rates of e-commerce growth, and current overall market elevated rates of inflation. Moving on into membership revenue, we see 200 basis points of expansion in membership revenue over the next 10 years. Why? This is because the last time Costco had a price increase was all the way back in 2017 for their membership prices. So we strongly believe another price increase is coming, as they typically increase their prices once every 6 years or so. Now, this combined with Costco's 93% membership renewal rates gives us confidence in seeing 200 basis points of expansion over the next 10 years in membership revenue growth. Now, moving on into store count growth, in which we see 100 basis points of expansion. This is due to Costco's young tenured management team, quality international image, and increased demand for their overseas stores. We see 100 basis points of expansion here. Now, looking at each of those revenue drivers as they relate to top line revenue. Over the last 10 years, you can see same-store sales and store count growth account for the majority of that top line revenue growth. And in the next 10 years, you see the same thing, same-store sales and store count accounting for the majority of that revenue growth. However, a meaningful thing that I need to point out is membership revenue increasing from 0.1% to 0.2%. And this is very valuable for Costco, as membership revenue really drives operating leverage, as membership revenue is pure profit. Now, finally, looking at more in depth into our bull case in terms of projected CapEx and working capital assumptions, we've got heightened levels of inventories, heightened levels of accounts receivables, which is a slight drag to our free cash flow, partially offset by increased accounts payable. We also have additionally increased CapEx spends and also higher revenues, which result in slightly higher free cash flows in our bull case analysis. Now moving on to Tim for Catalyst.
So we're catalyst for Costco, and why we're so bullish for Costco. As Nick said, we have membership price increase due. About every 5 to 6 years, on average, a membership price increase happens. It hasn't happened since 2017. That's why, and also with the 93% membership renewal rate and a consistent growth in members. Next up, this is our money slide. We have the number of stores in China at 6, the number of stores in the US at 604, and the population of China 5 times that of the US. There is room for growth here. And then I also want to point your attention to the video currently being played. It looks like Disneyland. It's not. This is the 6th store in Costco. It's not even the first. This is the latest store opening in Shenzhen just to be able to shop in Costco. And then with our summary with Nick.
So in summary, you've got Costco, a proven business model with solid operating performance, incoming catalysts of membership price increases, and robust international growth prospects, gives us confidence in recommending a buy rating on Costco at a 12-month target price of $840 with 16% upside.
Thank you.
Thank you.
Thanks.